I am going to turn you into an outstanding equity analyst. And that's the topic of today's video. I'm going to show you my own process, a high-level overview of it, of how a professional equity analyst is going to use fundamental and macro analysis to pick companies. And we're going to be featuring Baidu in this deep dive. So today we're going to be walking through macro, how to understand your environment. We're going to talk about industry analysis and whether the winds are behind your back. And then we'll talk about company analysis to help you understand whether this company has a corporate strategy that is distinguished and how to look for that edge. I will teach you that today. And the reason this video is so important is that as we go through the remainder of this year, there will be many people who will be seduced by the bear market rallies. And when they get seduced by these bear market rallies, they could enter a very dangerous bull trap. And that is my goal here, to help you identify the companies that will be suitable for intermediate and long-term investing. So with that said, let's get into it. If you're new to my channel, my name is Larry. I talk about US and China macro strategy. My channel focuses on fundamental and macro analysis. On a secondary level, I also talk about technical analysis, but that's a secondary focus. Now make sure to be on my email list. My public email list, you can see here over the last 30 days, the number of wonderful friends reading my content just gets larger and larger. I produce very high quality email notes to my community once or twice a week, and make sure to follow me on Twitter as well, where I share short form thinking. I have more time to post on Twitter rather than on YouTube. Now let me know in the comments below, before we get started, what are some of your favorite companies in this environment? Because remember, I believe that we are in a stagflationary environment and we need to approach this accordingly. All right, so now we're going to evaluate companies using a planned framework, and we're going to use Baidu as the case study. Ticker BIDU, and their Hong Kong listing is 9888. And my framework is, I always like to start off with macro, followed by industry analysis, and then company-specific fundamentals, and then identify objective entries with technical analysis and objective exits with technical analysis. Now, macro is really important because it gives you the overview of the environment where you're allocating capital. And every sector has certain types of considerations. Now, I'm a Chinese internet analyst, and my hierarchy, and this is my opinion, of evaluating the sector using macro is that regulation comes first. Zero COVID is actually second. Stimulus is third, non-consumer stimulus is fourth, and then general sentiment is fifth. Now, for a deeper dive as to why I believe the hierarchy is structured this way, I discuss this very much in detail inside my community, but this is my general hierarchy where I make my decisions based off of this framework. Now, in terms of China regulation, I believe that it's here to stay. It's about to what degree will companies be impacted, and in terms of understanding the Chinese household, it's important to really follow real estate as well, because it's responsible for 40 to 50% of Chinese household wealth. So when consumers are feeling good about their homes and their home values, what's going to end up happening is they will spend more, they will consume more, and that will allow internet companies like Baidu to advertise more. So it's all linked and it's all related. Now, in terms of the zero COVID policy, a lot of people think that zero COVID is the most important catalyst for businesses. I actually think it's the second most important catalyst, and the reason is this. It's that zero COVID, the number of cases can rise, but then they also fade, whereas business regulation does not change until the policy is changed by officials. So one has much more of a temporary impact, like zero COVID, and one has a more permanent impact, like regulation. In my opinion, regulation can change the valuation multiples that the buy side is willing to give a certain sector, whereas zero COVID is much more transient in terms of its impact. But that is my opinion. Now, Chinese internet companies, because they have a large audience base, information is likely to get screened before it gets disseminated, and that's one consideration that people should have when they look at companies like Baidu. Now, a macro consideration is this. The regulation landscape has definitely gotten friendlier since 2021. Even though regulations are not going away, China is in a stimulus-driven environment. The rest of the world is fighting stagflation. For the US, It's much more about a sector by sector consideration. Now let's jump into industry considerations. And this is a very important part of the research process because this will help you understand whether the company is inside a growing industry or a shrinking industry. Okay, because a rising tide lifts all boats. Now, Baidu's core business is specifically in advertising and the AI cloud model. The outlook for these industries is very important for Baidu. So here's an example. Because Baidu's core business is in digital advertising, we want to spend some time understanding what is the aggregate digital ad spend in China over the next several years. This will help you understand whether Baidu's growth prospects will be met with headwinds or be met with tailwinds. And also, because Baidu is in the cloud business, we want to understand what is the cloud outlook for China going forward. Because then if Baidu can follow with a strong company-specific execution, that bodes well for their business segment as well. And then finally, we want to understand, because Baidu is in the industry of engagement, advertising, we want to see how much time is spent on Baidu relative to other platforms. So understanding aggregate time spent on internet platforms is also a unique way to understand the appeal of the product and the promise of the product going forward. And monitoring market share will also help you understand where they are now and what is their growth potential going forward. Now, in terms of the company-specific considerations, when it comes to any company, Baidu is the example today, but any company in general, we want to understand the product and, more importantly, the corporate strategy. And so a quick company overview of Baidu, in case anyone is not familiar with the name, is that Baidu is one of the largest search engine companies in China, similar to Google here in the United States. And on top of search engine as one of their core businesses and digital advertising, they are also focused very heavily on the AI cloud and also autonomous driving in the future. And we'll talk about that. Now, in terms of Baidu's revenue model composition, here's how we think about their business model. Baidu Core, that's composed of advertising and non-advertising. That is 70% of their overall business. Okay, so 70% of their overall business comes from advertising and non-advertising. 30% of their business comes from their subsidiary called IQE, and that's more of like a Netflix video streaming kind of business. Inside Baidu Core, advertising is roughly 63% of revenues, and the non-advertising segment is 27% of Baidu Core revenues. So what this means is that depending on your outlook for how quickly the advertising segment or the non-advertising segment is going to grow, that's going to drive most of Baidu's overall business model. And here's an important fact here. It's that for AI cloud, this is inside the non-advertising segment revenue. It contributed 70% of this segment. And not only did it contribute 70% of that segment, it grew 43% year over year in the first quarter of 2022, which is twice the industry average. In the full year 2021, this segment grew 65%. So one of the things that you want to do as an equity analyst is identify, are there segments inside a company that are rapidly growing and in the future could make a meaningful contribution to revenue? Because if that is the case, that could change the margin profile of the company, and that could change the valuation multiple that the buy side gives this name. So where do we find this information? Because this helps you inform your investment strategy. The first thing that fundamental equity analysts should do is always study a company's annual report. Dig into their income statements, understand where the segment revenues are coming from. And then the next thing that they can do is search the company's corporate website to see what kind of presentations have been issued. Here's an example. Baidu spends about 20% of its annual revenue on research and development. That's a significant percentage because that means the company is dedicated towards innovation. We can see here that as revenue has grown, so has research and development, and a large R&D spend means that a moat is going to eventually be deepened if they have expertise in that area. And over a 10-year horizon, we can see that research and development is the fastest growing line item within Baidu's cost structure, outpacing SG&A and also outpacing the cost of goods sold. And The question that all fundamental equity analysts should ask is, where is the R&D spending going towards? And more importantly, is it fruitful? So now that's what we're going to discuss, because if you want to be a tech analyst, following the R&D line item and then seeing what kind of progress the company has made, that's a very important consideration in the research process. Now let's take a look at strategic positioning. Strategic positioning is important because it helps us understand where the company is today and where the company wants to be in the future, and how that R&D spend is going to bridge the company's present into its future. So to do so, we're going to look at a product that Baidu is heavily focused on, and that's Apollo Go. And it was granted the first permit in China to provide driverless ride-hailing services in Beijing. Here's a glimpse into the future of Baidu's technology, Apollo RT6, one of the products that they will unveil at the Baidu World event coming soon. And in terms of their driving product suite, they serve a lot of features that they sell to clients. And one of them is smart driving, navigation, parking. Another one is cloud. Another one is Alexa-like in-car voice interaction. And then another one is maps. And clients that Baidu has secured so far include large automakers like BYD and Dongfeng Motors. And coming soon, Baidu is also going to make EV cars under the brand JIDU. Now, in case you're not familiar with BYD or Dongfeng Motors, these are two very large EV companies in China. I know that NIO gets a lot of press, but BYD and Dongfeng Motors are also large players in the market as well, and they're clients of Baidu. Now, here's an image of what China's JIDU EV car might look like in the future, and Baidu is going to be spending a lot of time on this product going forward. So within 3 years, non-advertising revenue could eventually be 50% of Baidu's core revenue as AI Cloud and Apollo Go gain momentum. And this is important because Baidu is now a top 4 cloud provider in China. And as the company starts to diversify outside of just the search engine and digital advertising, investors are going to be thinking about how to properly give the company a potentially different valuation. The next step in my research process is I like to spend a lot of time looking at the earnings transcript, understanding the Q&A, the questions that the sell side has for the company. And the reason I do this is to dig into the primary source of data with which the narratives and the media headlines are derived. This way, my assessment is objective and I'm not reading quotes here and cherry-picked data there. So here's an example of this in practice. In the last earnings call, there were several investment banks that asked key questions. Citigroup asked about outlook, and Baidu responded with certain information and certain data. And this kind of response is heavily weighed towards my investment decisions, because I don't want to base my decisions off of what I read from media outlets or what other analysts say. I want to read exactly what the management said in response to that question. That way I'm looking at the primary source. So an example of questions from Citigroup included, they asked about the outlook. And the response to a question like outlook is very important. Like, what drives the outlook, what tempers the outlook, what can make the outlook more positive. So those are things that I specifically look at in the Q&A. Another question came from Goldman Sachs. And Goldman asked about Baidu joining the People's Political Consultative Conference in Beijing last week. And because the CEO, Robin Li, was one of the attendees of the internet companies, what was their takeaway from the meeting? And this is important because this will tell you from a political standpoint, how does Baidu's product align with the party's long-term vision for society in China? While that is a little different from a traditional investment analysis framework, because we're working with Chinese internet companies, that is a very important consideration. Up next was Morgan Stanley, and Morgan Stanley knows that the non-advertising part of Baidu's business is becoming more and more important. And so they asked about the outlook for the cloud segment, all the information that I showed you earlier, the industry and how Baidu is growing within that niche. they asked a question about it. And the response to this question is also going to help analysts understand what kind of multiple should they be giving this segment within Baidu? What kind of multiple should they be giving the overall business considering this growth area inside the company? So only you can decide if you like the story. And the way to understand the story is to follow the name closely, understand whether the name has regulation on its side or against it, and to follow really important corporate presentations. For example, Baidu is having their World 2022 event coming soon. And for fundamental equity analysts that want to understand the vision of the company's future, these events are really important. So whether you follow Baidu or companies like AMD or NVIDIA or Qualcomm or Costco or Walmart, attending their corporate presentations will give you a stronger understanding of the vision of the company's strategy. And for Baidu specifically, it's their World 2022 event. If you want to check it out, it's in the link in my description. Next up in my process is the valuation setup. And this is a really important step because this will help you understand whether you are overpaying for the company or whether you're getting a good deal. So one of the checklists that I like to do is look into my YCharts account, which is a sponsor of my channel, by the way, that whether the company is selling at a discount or a premium to its history. So what I like to do is, for example, Baidu here, I'm going to look at their overall gross margin profile. I'm going to look at their forward PE multiple over a 5-10 year basis. I'm going to look at their sales multiple. I'm going to look at their traditional earnings multiple. And the reason I do this is to understand where the company's valuation is relative to its history and why the market has decided to price the company the way it has. In addition, I like to do something what I call valuation competition. Is the company selling at a discount relative to its peers or at a premium? And is it for a good reason or is it for a reason that I think might change? So these are opinions that only you can form, but this is a part of my thought process. And then in terms of my checklist for stagflation, for equity research, here are other items that I look at. I look at the gross margin profile. I look at the free cash flow generation. I look at the relative valuation profile, and then I look at the earnings calls and sentiment with the sell side. So some of these items I've already discussed, but personally, I think that we are in stagflation. So for that reason, I believe investors really care about free cash flow generation. This is one of the most important metrics to analyze because we're in a stagflationary environment. So what is free cash flow? Well, free cash flow is, quote unquote here from YCharts, the amount of cash generated by a business that is available for distribution among its security holders. And specifically, free cash flow can be used to pay dividends, make acquisitions, develop new products, invest in new plant, property and equipment, pay interest expenses, and reduce debt. And according to many investors, free cash flow is the best indication of a company's ability to generate cash. And I completely agree with this. And here's the formula if you want to take a look at it. If you're studying for the CFA, this formula is probably really helpful for you. But essentially, free cash flow is one of the most important metrics that I like to follow to screen out which companies are likely to perform strongly during stagflation. And so I look at Baidu's historical free cash flow quarterly data, and I compare this information relative to its history. Are we at the lower end? Are we at the upper end? Are we at the median? I make those kinds of conclusions by looking at objective data. Now, one of the cool things that I want to show you here is a DCF model that my analyst team helped me to create for Baidu. And as you can see here, there is a lot of data pulled from the financial statements in order to come to a conclusion of what the shares should actually be worth depending on your opinion of the discount rate. Now, the conclusion is that from the DCF model, Baidu is undervalued. However, we also need to assess the risk premiums that the market is giving the company to adjust for the risks. Now, I want to give a really important message to all our friends listening. My approach when it comes to investing is very focused on macro and fundamental analysis. So I do not personally use DCF models to make my decisions. Now, why is that? It's because the discount rate that you choose is highly subjective. And also the market is moving so quickly that a DCF model sometimes cannot capture where that company is likely to range in the short intermediate term. DCF models work really, really well if you're willing to buy and hold for several years. But I know a lot of people inside my community are more intermediate term and focused. My members are not short term and focused, but at the same time, they're not going to be willing to hold a company that they're uncertain about for years for it to play out. So in my opinion, a DCF is a very powerful tool. It's a great tool for analysts, but I just want to make it really clear that if you join my community, I do not leverage the DCF model in order to make my opinions. I rely much more heavily on fundamental macro analysis, and then I use technical analysis for entries. So every research analysis that you do always has to be accompanied by understanding the risks. This cannot be understated. The risks with investing in any sector must be assessed. And if you've been following me for a while now, you would know what those risks are when it comes to investing in the Chinese internet sector. So one of the biggest ones is the Holding Foreign Companies Accountable Act. And this is where the SEC is looking at a certain list of companies that may not comply with the specific rules, and therefore there is a risk of delisting off the US markets. That is something that is a risk for every single Chinese internet equity investor. In addition, there are some corporate structure considerations. So Baidu, the company, quote unquote here, first bullet point, is a Cayman Islands holding company with no equity ownership in our consolidated affiliated entries, and we conduct our operations in China through our PRC subsidiaries and our consolidated affiliated entities with which we have maintained contractual arrangements. So this means that when you are buying Chinese internet companies, you are buying a contractual agreement, and you are not necessarily buying the equity of the company like you would with a traditional US company. So there are risks behind that, and every person following the Chinese internet sector should understand this. This does not apply to just Baidu. This applies to Alibaba. This applies to other really high quality large cap companies as well. So risk factors can always be found in a company's annual report. No matter what you do, always look at this part of the annual report. This will give you a greater sense of the company's risk premium. And if you are inclined to understand valuation, because it isn't both an art and a science, then you can assess what kind of multiple should I give this company based on the risk factors that are present. So in 2021, because Baidu is aware of the risks of being on the US market, no matter how small or how large that chance is, they did a secondary listing in Hong Kong, and ticker is HK9888. So if you want to check out that event where they listed in Hong Kong in 2021, I'll also link the video in my description below. Now, for investors concerned about ADR delisting or US-Sino tensions, once again, one of our channel partners, Interactive Brokers, allows you to buy Hong Kong listed shares so that in the event a black swan event happens like delisting, you'll have Hong Kong listed shares on Interactive Brokers. That's something that I'm personally looking into. The last step in the research process is by leveraging technical analysis to identify objective entries and objective exits. So you must form your own system, and you must choose indicators that make the most sense according to your time frame. So what I mean by this is that when you are looking at technical analysis, if you are a long-term investor, it typically does not make sense for you to use the 50-day moving average to inform your opinions, because the 50-day moving average is more or less a 2-month rolling indication of where the company has traded. If you are a long-term investor, the 200 moving day average is much more relevant to you. So know your time frame, know what kind of indicators suit your specific needs, and that's how you can leverage technical analysis to be more powerful in your decision-making system. So this is a high-level overview of my process. Everyone has their own process, but the process I showed you is a glimpse into how asset managers, institutional investment firms, and hedge funds typically think about equity research. So now let me show you how we've been applying this inside our research-oriented community in terms of what we've been doing, and give you a quick recap on ever-changing market conditions and our opinions. So in mid-June, with valuations at historical troughs, I recommended Meta, Micron, and Berkshire Hathaway. You can see here in my message to our community, I discussed long opportunities in Meta in that 160, 163 range, Micron in that 55, 57 range. And even though I only gave price targets, all those price targets were well informed based on all of the fundamental macro and technical analysis that I've done on the name. As you can see, those names have done pretty well up until the recording of this video. In addition, going into July, we discussed how semiconductors was one of the stronger opinions that we had relative to other sectors. And from a long-term standpoint, we talked about how semiconductors would very much be rewarded for long-term investors at these prices and valuations. As you can see here, when we produced this report on July 1st, Applied Materials at 92, AMD at 98, Broadcom at 491. You can see the prices here. When we discussed our favorable opinion of semis, it was because of our framework that we've done on fundamental analysis, the valuation work, and also the technical setup. Now, of course, anything can change at any given moment, and I don't personally think the market has fully bottomed. So this potentially has been a very nice counter trend rally in the context of potentially a larger decline, but according to our opinion here, anyone who followed us here are getting definitely rewarded. We also discussed a valuation and technical target for Alibaba again. So a lot of my viewers on YouTube think that I don't have intermittent opinions, and that couldn't be further from the truth. So when Alibaba retraced from that 120 to 98, 103 level, I once again told our community, you can see here on July 15th, that we made a soft addition to Alibaba at 99 per share. And that is informed by, once again, the fundamental, the valuation, and the technical setup that we have studied on the names in our coverage universe. And one of the headline opinions that we've shared inside our biweekly report is that the S&P 500 can revisit that 4,200 range. You can see that I published this report on July 16th, and indeed we are getting close to that range. So part one of my opinion is getting achieved. The methodology of how I come to these ranges is discussed inside my community, but I also gave you a very powerful overview of how I do my research. So everything that we do, everything that you do should have a process. And if our opinion together, okay, is correct, it's because of a process. And if we're incorrect, that's okay. It's okay. We still rely on a process. So all the things that I discuss with you on my channel, whether I'm right, whether I'm wrong, it's due to a process. Now you can disagree with whether I'm right or whether I'm wrong, or you can agree with whether I'm right or whether I'm wrong, but regardless of whether you agree or disagree, especially for the skeptics, the critics, I rely on a process. Nothing is based on just gut feeling. Nothing is based on just instinct. And you shouldn't make your decisions that way either. This keeps us more objective when stuff happens. We make plans and we follow them. And not following a preset plan is one of the worst things that you can do as an investor. So because of this process, I get much words of affirmation from our community friends. So we can see here that my friends always message me about how much they love the research, the value that I provide. You can see here that people think my research is top notch. And here's the thing. It's important to remain humble. It's important to have that beginner's mindset, even though my people, my friends, my members, they love what I do. I want to let everyone know I have that beginner's mindset, and I'm always learning, and I'm always trying to grow here, and I will help as many people that want my help. So my coverage universe, guys, is US and China tech and consumers. And the reason I want to share with you this is that a lot of members, when they join my community, they end up asking me a lot of questions like, Larry, what do you think about this company? What do you think about this company? And I have a very specific coverage universe. I tend to focus on the top 10 names inside the S&P 500, the NASDAQ. I also cover the top names inside the KWEB ETF. And the reason I have a coverage universe, and you should too, is so that you have an informed informed opinion of the companies that you follow. I cannot possibly have an opinion on every single company in the S&P 500. So you can think of my community as a sell-side investment research provider that has a certain coverage universe across US and China, and it's designed for investors who have had at least 1 year of experience in the markets. That's my opinion. If you're completely new to the market, my community can still be very helpful and you can definitely learn, but I do think it's better to have some experience before coming through, because I do use a little bit more intermediate level terminology that complete beginners may or may not understand. So my community is best for friends on YouTube with an investor mentality and have a preference for fundamental and macro analysis as a primary way of decision making. So I just want to take a moment to thank my corporate partners for placing a stamp of approval on my investment research, YCharts, Interactive Brokers, and now Seeking Alpha as well. You'll see them in a future video soon. So my friends, leverage what I just showed you and find the best possible opportunities in this market. Stay patient. We are in a market where only patient investors will be rewarded. Do not chase bear market rallies. Wait for the opportunities to come to you. Wait for the trade to come to you. Do not succumb to impatience. Use this opportunity to become an outstanding analyst. So my village is rapidly growing, and if you are a long-term patient and open-minded person, I want you to be a part of it. So connect with me on social. Long-form analysis on my email list, short-form thinking on my Twitter, be my IG friend, links are in my description, and really let me know in the comments below what types of companies that you have on your watch list at this moment, what kind of companies that you like. And once again, I hope you enjoyed this video. Hit the like button if you enjoyed it. And with that said, much love as always, guys. Stay safe in the markets, and I will see you in my next video.